Hey everyone, it's time for a monthly market update for residential markets. As always, I'm excited to bring to you what's going on in this shifting market because we're in the middle of a shift, a hard shift. So let's get started. So the median price of homes in Dallas-Fort Worth was $415,000 in the month of August, which is up 15% year over year from August of last year. So with that, we are beginning to see the price appreciation slow down, which is what we need just for the consumer, the buyer, and the seller to be able to have an opportunity to buy something that makes sense on the sale of your home. So price appreciations went from around 30% to now 15%, and I really believe it needs to come down to closer to move another 10 to 12% more normalized price appreciation, where you get to that 3 to 5% year over year price appreciation. And I think that's what we're going to see before we actually see the market move again in a strong way. Good news is, though, is that inventories are rising. Prices are coming down. For example, today I was looking at our local markets here and a monitor price drops, because that's going to be the part that needs to happen to get the market moving again. And it's been averaging in our area about 30 price drops a day. And today it was, in the last 24 hours, 101. So that's good news for the buyer, and it's good news for the seller. The seller may say, no, I don't want to have to lower my price. But the reality is, if you're making a move, you're going to make it up on the buy side. We've got to get the prices down to offset 6.2% on the average mortgage rate right now for a 30-year mortgage. So prices have to come down. We expect that, we're kind of peaking out on interest rates between 5.5 to 6.25. I think we're going to see things just kind of fluctuate back and forth over the next few months. The Federal Reserve has plans to raise interest rates again, but typically the market's already built in what those rates are going to be done, what the Fed's going to do through the end of the year. That's already built into the interest rates. So if anything, I think we'll see lowering of rates as inflation begins to come down, because inflation read was high again yesterday at 8.3%. But you're starting to see more inventories in car lots. Everywhere you go, houses, we have more inventories. For example, inventories are up 68% in the Dallas-Fort Worth Metroplex. Home sales have dropped. Car sales have dropped. Vehicle sales have dropped. You've noticed they start to offer more incentives on financing. The same, home sales have dropped 10% year over year. Sales in Collin County dropped the most, 20%. That's a huge drop in sales year over year. Interest rates, again, at 6.2%. I think we're peaking out at those interest rates, and we're going to see them fluctuate between 5.5 to 6.25, and that's going to be the new normal. Prices have to adjust, and they're beginning to, so that's the good news. Rents are higher as well, so 14% higher than the year earlier. But that's also beginning to moderate, whereas before it was 20 to 25% rent price appreciation year over year. Now we're down to about 14%, and we manage a lot of properties, single family properties, and whereas before we just put it on the market and we were getting whatever we're asking, now things are beginning to sit even as a rental, and we're having to make price adjustments. But there is still strong demand, because we have fundamentally the DFW Metroplex is going to do nothing but do this, and that's why I'm going to be buying here in the next few months. I'm looking for a personal home, and yes, interest rates are high, and prices are still going to be pretty high. But the reality is our Metroplex is going to continue to appreciate over time, barring any geopolitical catastrophe or something like that in the markets. So 14% higher on rents. We're seeing that as well. Rents are beginning to moderate. It's all good as an overall general summary for our housing market. It was just out of control. Interest rates increasing is beginning to do what it needs to do, which is slow things down. Even being in real estate, I don't like that for my business purposes, but I know it's better for the long run and excited to see that. So let's go drill down into the counties here and just go to a county by county summary and look at the numbers. So this is of August. Average price in Rockwall County up 18%, Kaufman County 15%, Collin County 19%, and Hunt County 27%. So Hunt County, where you see the value of property, the lower prices, they're still seeing pretty significant price increases just because people are moving out and there's more demand for the lower price points. We're looking at price per square foot, all up right around 20 to 26% in Hunt County. Again, we still need to see this all come down to closer to 5% price appreciation before we really see everybody digesting the new interest rate environment we're in. Days on market, average days are up 100%, which they're up 100%, but it's only 30 days is the average days on market in Rockwall County, 32 in Kaufman County, 23 in Collin County, and 33 in Hunt County. So we're still only 30 days on the market, which is really a strong seller's market still today. Month supply, this is what also confirms with a seller's market. We don't get to a balance out of the seller's market until we get 4 months and beyond. And we're just now, if you notice, the last 3 months, we've just been hovering around that 3 months inventory, and we can't seem to get past that 3 months inventory because there's still just so much demand out there, even in this high price and high interest rate environment. But we're beginning to see the prices come down. So it's moving. Rockwall County 2.9 months, Kaufman 3.1, but this is all up. Look, Rockwall is up 93%, Kaufman 55%, Collin 110%, 52%. So that's the shift, being up 100% nearly. That's what we call a shifting real estate market on our month supply. Homes for sale, 100% more homes, twice the amount of homes. Not that there was a lot of homes to look at this time last year and available, but it's coming up, and we steadily are seeing that. You have 65% more in Kaufman, 75% in Collin, and 72% in Hunt County. So more homes for sale. That's good. It just seems to be about the same the last couple months. We really need to see that number jump more to get this shift down to normal price appreciation. New listings, this is the one we really need to see a lot more of, and we're not seeing it, and hopefully we'll begin to see it here shortly. But new listings only up 18, 10, flat in Collin County, and 13% in Hunt County. We need to see more people come to the market with their homes because we need homes. And that's going to help finish the shift out or prolong it, one of the two, if we don't see more listings in order to bring the prices down. Pending sales, that's an indicator into this month. Rockwall County is pretty flat, 2%, down 10% in Kaufman County, 20% in Collin County, and then 11% in Hunt County. So we're seeing less transactions coming in and closed sales. If you see here, you're down 4% in Rockwall County, 5% in Kaufman County, 20% in Collin County, and 5% in Hunt County. So in general, for your residential market update is that you're going to begin to see opportunities. If you're looking to make a move, okay, it's reeling in the expectations. And I understand as a seller that it's hard to reel in those expectations. But understanding that, yes, maybe I'm not getting 30% price appreciation. Maybe it's 5 to 10 to 15% price appreciation over last year, but you still have that equity that you've built over the last couple of years to go make a purchase. You're going to also be paying the same percentage less than you would have been if you had 30% price appreciation on your purchase. and we're beginning to see more incentives coming from new builders. They're offering 4% finance rates, things like that. So they're buying down the rate. The thing you got to be careful there is you got to pay for that buy down, and they're paying with the price of the home. So you may be better to go ahead and pay 6.5% on another builder that isn't offering, or 6% that isn't offering a buy down, because you're paying less for the home. So you have to really be smart and strategic about your move right now. And here at M&D Real Estate, we would love to help you. We have nothing but 5-star reviews. We have the best team around. We don't just bring anybody to our real estate firm like the typical Keller Williams, Caldwell Banker that'll just take anybody. There's an interview process and culture of 5 stars that they have to have in order to come on board with us at M&D Real Estate. So that's what's separating us, and we would love the opportunity to serve you, whether it's residential, commercial, or property management. We want to be your one-stop place for high-level service in real estate. You guys have a great day. Thank you. Bye-bye.